You ever look at the market and wonder how some people just know? Like they have a crystal ball for picking the next big winner. Well, today we're pulling back the curtain on a true market wizard, William O'Neill. We're going to dive into the powerful system he created, a system that tried to turn the art of stock picking into a genuine science.
It all started with just 5 grand. And over 2 incredibly volatile years, 62 and 63, O'Neill turned that small stake into this, $200,000. I mean, think about that. That's not just a nice little profit. That is a life-altering, 40 times your money, 4,000% gain.
So you have to ask, right? Was this just a fluke, a lucky shot in a crazy market, a one in a million thing? Or did he actually crack the code? Did he figure out a repeatable blueprint for finding those massive winning stocks? Well, that's exactly what we're about to find out. All right, so let's get into exactly how he pulled this off. And I want to be clear, this wasn't some wild all-or-nothing bet. Nope. It was a series of super precise, calculated moves. They were all based on patterns he saw emerging, patterns he studied like a hawk and turned into a system, building on the work of investing giants who came before him. Okay, here's the play-by-play. It's 1962, the market breaks, and he spots his first chance. He shorts a retailer called Corvette, making money as the stock goes down. Smart. Then a new bull market kicks off. He switches gears and goes long on Chrysler, the classic car company, right as it was starting a massive comeback. And then, for his third masterstroke, he buys into a company called Syntex, which had a product that was, well, about to change everything, the birth control pill. You put those three trades together back to back to back, and boom, there's your incredible 40x return.
And this right here is where it gets really good. Because O'Neill realized this wasn't just luck. It wasn't random at all. He had found a pattern. So he dove in. He studied hundreds upon hundreds of the biggest winning stocks in history, and from all that data, he boiled down their shared DNA into this powerful 7-step checklist. He called it Can Slim.
First up, the letter C. This stands for current quarterly earnings. What O'Neill found in his research was mind-blowing. The absolute best stocks almost always showed a huge jump in their recent earnings. We're talking at least 25% year over year, and they did it before the stock price took off. Think of it like the first rumble of an earthquake. It's the sign that something big is about to happen. Now, a single great quarter is one thing, but what's really powerful and what this slide shows is something even better. O'Neill discovered that when earnings growth accelerates, going from maybe 18% to 25% and then bam, a whopping 50%, that was one of the absolute strongest signals you could get. It's like a rocket ship kicking in its second stage boosters. The real power is just starting. Next up is A for annual earnings growth. C, one great quarter's nice, but the real superstars, the Hall of Famers, they show up year after year. O'Neill was looking for companies with annual earnings growth of at least 25% for the last 3, 4, 5 years. And on top of that, a strong return on equity, 17% or more. This is your proof that the company isn't just a one-hit wonder. It's a well-oiled, profit-making machine. All right, let's talk about N, which stands for new. And this is a huge one. O'Neill crunched the numbers and found that a staggering 95%, let that sink in, 95% of the greatest winning stocks had something new happening, some kind of catalyst that was just lighting a fire under the company's growth. So, what exactly does he mean by new? Well, it could be a bunch of things. It could be a totally game-changing new product, just like Syntex had with the pill. Or maybe it's new management. A superstar CEO comes in and turns a whole company around. Heck, it could even be the stock itself hitting a new all-time high price. That's a huge signal, breaking free from all its old resistance and blasting into blue sky territory. Okay, on to S for supply and demand. This is just pure, simple economics. O'Neill noticed that, again, 95% of the monster stocks had fewer than 25 million shares out there when they started their big run. See, when a company has a smaller supply of stock and then a ton of demand from big institutions comes flooding in, well, that demand has a massive outsized impact on the price. It really is like trying to squeeze an elephant into a phone booth. Something's got to give, and in this case, it's the stock price, shooting upwards. The letter L forces you to ask a really simple but crucial question. Is this stock a leader or is it a laggard? O'Neill was crystal clear about this. You buy the number 1 or number 2 company in a hot industry.
period. You don't mess around with the sympathy plays, the weaker companies that might get a little bump just because the leader is doing well. You want the champion, the best of the best. You can often spot them because they have a super high relative strength, or RS rating.
And that brings us to I for institutional sponsorship. This is all about who's buying the stock. You want to see big players, mutual funds, banks, pension funds, getting in. Their buying is the rocket fuel, the heavy firepower that can really send a stock soaring. But here's the catch, and it's a big one. You want some big money in, but not too much. If every single major fund on Wall Street already owns a massive chunk of it, guess what? The party's probably over, and you're just showing up for the cleanup. You see how this all connects? The L for leader and the I for institutions, they're basically two sides of the same coin. Think about it. How does a stock become a leader in the first place? It's because those big institutions spot its potential and start pouring billions of dollars into it. They create the leader. So by looking for that institutional sponsorship, you're not just guessing, you're following the footprints of the big money. And finally, we land on M for market direction. And honestly, this might be the most important letter in the entire system. This quote from O'Neill himself just says it all perfectly. You can do all the homework, find the absolute perfect stock that checks every single box, but if you buy it when the whole market is collapsing, your chances just get crushed. It's true what they say, a rising tide lifts all boats, but a falling tide, well, it can sink even the strongest ships. Okay, so there you have it. That's the 7-point CanSlim checklist. That's what to buy. But that's only half the battle, right? The other huge question is, when do you pull the trigger? Well, O'Neill had an answer for that too. His system wasn't just about finding the right stocks. It was about finding the right moment. And he did that using a very specific chart pattern. He called it the cup with handle, and it's exactly what it sounds like. After looking at thousands and thousands of charts, he noticed this one shape showing up over and over and over again right before a stock would just explode upwards. What this pattern really represents is a pause, a period of consolidation after a big run-up. It's like the stock is taking a breath, coiling up like a spring, just gathering energy for its next massive launch. So let's break this thing down. First, you need a stock that's already been in a solid uptrend. Then it pulls back and forms a nice rounded U-shape. That's your cup. After that, it drifts down just a little bit on lighter volume, and that forms the handle. Now this handle part is key. It's the final shakeout. It's where the weak hands, the nervous investors, get scared and sell. It's kind of like a roller coaster giving one last little shake to get the scaredy cats off before the big, steep climb. And the buy point, the magic moment, it's when that stock breaks out above the handle to a new high and does it on a massive surge of volume. Let's see a real-world example. We'll go back to one of his legendary trades, Chrysler, 1962. So after a market correction, the stock forms this beautiful cup base. Then the Cuban Missile Crisis happens. The whole market is freaking out, and that panic creates that slight downward drift, the handle. Now, most people are panicking and selling, but O'Neill, he sees this chaos not as a threat, but as the final piece of the puzzle falling into place, the classic shakeout. He buys the moment it breaks out from that handle on huge volume. And the result? The stock shot up 215% over the next 52 weeks. But look, here's the real secret sauce. The thing O'Neill and his students talk about more than anything else. CanSlim is an amazing formula, but it is totally useless without the right mindset. Seriously, you can have a Formula One race car, but if you don't know how to drive, you're just going to crash it into a wall. The psychological part, the discipline, that's even more important than all the technical rules we just talked about. And it really boils down to 3 pillars. First, master your own psychology. You need solid rules to keep you off that emotional roller coaster of fear and greed that just wipes out most investors. Second, control your risk, always. Get this, you don't even have to be right most of the time. You could be right only 1 out of 3 times and still make a fortune, as long as you cut your losses short and let your winners run. And number 3, check your ego at the door. The market is the ultimate humbling machine. It doesn't care about your opinion or what you think should happen. You have to be ready to admit you're wrong, and you have to do it fast. And this is probably the most important rule in the entire CanSlim universe. It is the single most critical rule for controlling risk. You cut every single loss at 7 to 8% below what you paid for it. There are no exceptions. No what-ifs, no maybes, no I'll just wait for it to come back. It's not a suggestion, it is an ironclad law. This is how you protect your money so you can live to trade another day.
So the big question is, does a system that's over 60 years old still work in today's crazy markets? Well, the core principles, strong earnings, real innovation, supply and demand, those things are timeless. And you know what? The data absolutely proves it still has some serious power.
Just look at these numbers. A performance test tracked over 5 years showed the CanSlim strategy returning 176%. The S&P 500 over that same time, just 68%. That's not just beating the market, that is absolutely crushing it. It's a proven method that has shown it can outperform whether we're in a bull market or a bear market. And maybe this is the biggest takeaway of all. O'Neill didn't just give people a rigid follow these steps formula. He gave them a framework, a set of powerful tools. The real goal isn't to just blindly copy what he did, it's to understand why these principles work, to study your own wins and your own losses, and then adapt it all to build a system that fits you. So when it's all said and done, it comes down to this. William O'Neill literally wrote the blueprint for finding the world's greatest stocks. He did the work, he proved the system works. The only question left is the one you have to ask yourself. The system is there, but do you have the discipline to actually follow it?